Welcome back to another episode. We going over the micro E-mini NASDAQ 100 futures contract. We'll talk about the gap down that we had, talk about the repricing back into that, and then some levels that we are trading back into currently for the current price action. I'd like to preface this video by saying this is not financial advice. Anything that you hear in this video should be consulted with a financial advisor. Any decisions that you see made in the charts are all my decisions. Let's get into it. So the first thing we have is the daily chart. So we have this daily suspension block that look like we almost traded back into it currently. So we'll just see how we act up in here. How do we trade up in here? Do we consolidate back up in here? Do we get above it, or do we use it as resistance to go lower? So that's just a daily level. Doesn't hold too much affinity, but it's just a visual standpoint for where price could possibly want to bang around into. So I'm gonna drop down into the hourly chart. I'm just gonna show you what that looks like on the hourly chart, and then I'm gonna switch over to my other charts here. So here's the daily suspension block. These are the levels. You have your quadrant levels in there, and then you have the half quadrant levels in there also. These green boxes above, if price was to trade higher and get above, that's the suspension block. We have that SIBI again still, and then we have this remaining portion of that SIBI that price may want to reprice back into. But for the most part of it, I'm looking to see how do we trade once we get up in here. Inside of the suspension block, you see these two down close candles. Those are still fair value gaps, so we could possibly run out the buy side, trade up into those, and then use those to go lower. So if price is still in fact bearish, we could possibly do something like that, making that the high of the week using the suspension block and then the overlapping sell side imbalances on February 26th at 9 a.m. and then February 26th at 10 a.m. Switch over to the other charts real quick. So here's my daily chart. This is my blank chart. So this is pretty much my execution chart. The only thing I had delineated was you'll see the new week opening gap delineated, and then you see this candle's wick for downside. So I was looking to see, obviously this candle's wick is what we were supposed to trade through if we will continue lower, and I was grading out this level to see how price will want to trade to and react at those levels. Obviously we traded higher, repricing back into the new week opening gap, which is the candles close at 4 a.m. on Friday, and then Sundays open at 6 p.m. We also had an opening range gap, a new day opening range gap. So this is a new week opening gap, and we had an opening range gap discount level. So you will see at 4:15 we closed up here, and then at 9:30 we opened up somewhere down here in this candle, right? So that was a premium gap. So we could look for 50% of the range to be traded to by 10 o'clock. We obviously closed entirely, traded to and closed in the opening range gap, and we also closed in the new week opening gap. Let's drop down to a 30-minute chart real quick. Still having those daily levels transposed. So that's that daily wick. I want to see if we were to trade lower, how do we trade to those? And then upside here, the new week opening gap. Here we traded up into there and then traded through. So on that on this chart here, these down close candles is what you see here, right? So you got layered buy side liquidity pool, right? They may want to pop up and run that, right? So the high of that candle comes in at 0.99. So let's go take it off the hourly. I wonder if that was 0.99 even. Let's see. Yep. All right, cool. And then what I like to do is I just like to label it as buy side liquidity, so I know. So there's that layer of buy side liquidity pool that we may possibly see price want to punch up into. So whenever I see things like that and I have a draw on liquidity or directional bias on liquidity, then I will look to enter or my entry model to see price want to bump up into those levels. Got the fair value gap here and this one here. So we want to see how we trade once we get up in here. If we trade through those, we got these relative equal highs here. Right, so This high is lower than this high, so that's a low resistance liquidity run. If we wanted to run up into that, run that out. Let's drop back down into the 15-minute chart. So my 15-minute chart was pretty empty this morning, right? This candle right here is the 9:30 open, powered up, closing in that gap. And then once I get down to the 5-minute chart, actually, let's just do this. Let's just go to the regular trading chart real quick, regular trading hours. So you see this gap. So you see the close at 4 o'clock and then the open right here at 9:30. That is a discount. Sorry, that's a premium gap, right? So we open lower, so there's a premium gap that price may want to retrace back up into, and that can also lend to bias and directional things of that nature. 5-minute chart here. So again, my fib is here. So this is my fib for the new day opening gap. So the opening at, let me just show you. Boom. So what I did was on certain time frames, I have certain fib levels just to keep the chart clean. So here on the 5-minute chart, you see me fibbing the close at 4:10 and then the open at 9:30. So let's see, style 0, right? And I just have that there. So I take the 0 off because it's just cleaner in the price action charts. But when you look at this chart, you see that fib. That's essentially what I'm marking out. So I understood that we had a gap, new week opening gap right here, and then we could see price want to trade higher. So there was some one-sidedness, but there's a lot of back and forth in here before getting to that level, which is cool. It's the first day of March. It is what it is. As you can see, the current price action here, right? 9:30 open is here. Traded higher, traded lower, started banging around, pretty much, right? And I'm sure someone made money in this. There's money to be made in this, but the way that I trade, I'm not looking to execute anything. What I would want to see was something like higher, small little retracement back into a logical area, and then we run into that. These sideways days I can do without. 20 trading days, I only need about 10, 7, 13, 12 is about the sweet spot for the one-sided price runs that I desire to be in. So here was a no trade for me, but all the technicals was there. It was a smooth day. There was a rhyme and reason for why we were doing certain things in the charts. And just to give you the NASDAQ main, so this will give you all the new week opening gaps for the previous weeks. And as you can see, right, rhyme and reason here. All right, February 22nd, 2026, new week's opening gap, low and high. Traded up into that, closed that in. We didn't close it in with the bodies, but we banged around up into that. We traded up into that. This purple framework is the current new week opening gap. That's what I was showing you. Traded up into that, closed that in, traded through it, and then now we're banging around at the February 22nd. If this video was very helpful, like, subscribe, and leave a comment. Let's talk about it. Until then, talk soon.